What's going on, guys? Mike here, and welcome back to another video. Today's topic, we're taking XEQT and we're comparing that to a customized all-in-one ETF portfolio we build ourselves. If you're a subscriber or maybe you're new to the channel, we just did a recent upload on XEQT versus VFE. Now, for those of you who don't know what that is, VFE is an ETF that primarily focuses on the top 500 companies within the US stock market. And in that video, we actually discovered that the lesser of diversification, by purely investing into VFE in the US stock market, we actually increased our annual returns versus being an XEQT that was globally diversified. Now, is that a good idea? That is dependent on the investor. And I'm just going to quickly link over this video with Warren Buffett.
I think diversification is, as practiced generally, makes very little sense for anyone that knows what they're doing. Diversification is a protection against ignorance. I mean, if you want to make sure that nothing bad happens to you relative to the market, you own everything. There's nothing wrong with that. I mean, that's a perfectly sound approach for somebody who does not feel they know how to analyze businesses. If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably.
So we've heard it from Warren Buffett. Global diversification just hurts returns. Now, he also does say, though, that if you don't know what you're doing, in theory, that is probably the way to go. But if you do know what you're doing, centralizing your capital in the certain markets is a good strategy to capitalize on returns, but it does bring those risks. If you want more detail on this specific topic, definitely don't forget to check out that video, and I'll link in the description below. The question is now, do you go in XEQT, VFE, or do you actually build your own personalized portfolio of ETFs? Now, to just highlight some of the positives of that, if you are building your own global diversified portfolio and not going into something like XEQT, you get to now control your exposures, right? Now you get to control how much you're invested into the US. Are you investing in just the top 500 companies in the US, or are you investing in, let's say, the total US stock market, which I think ranges in about 3,700 different assets or equities? Do you want to invest in Canada? You know, that's maybe where your primary source of income is. Do you want to also have a high ratio of asset or equity holdings within Canada? Again, that's a question for you to ask. Do you want emerging markets? Do you want the full-blown international exposure? By doing a customized ETF portfolio, now we have those options. Now, just a few things to kind of go over, though. Depending on which broker you're using, you know, Wealthsimple doesn't have fees, but if you're going into, let's say, Questrade will charge you on everything you sell on an ETF. So, you know, thinking long-term in regards to retirement, when you got to start selling off your assets, depending on how many times you do that, maybe it's once a year or maybe you're doing it monthly, you can be paying upwards of, say, $50 if you have a whole bunch of different assets that you're selling off. So that's something to kind of just consider. I know $50 doesn't sound like a lot, but if it's monthly, you know, over the course of 35 years, that does kind of start to stack up. Whereas some people would rather be in, say, an all-in-one ETF where they have one stock ticker symbol to sell and they just have minimal fees to pay. So those are just a few things to kind of consider, right? Now, let's just get right into it. We're going to just kind of go into my screen share here, and we're going to start by just quickly doing one more quick recap of what XEQT is, just in case people here don't know what it is. So, XEQT is an all-in-one ETF. And we're just going to highlight on the holdings this time. We're not going to go into too much details, but XEQT holds asset or ETF assets underneath it. So essentially, like, we're going to be going and building our own. This is exactly what XEQT does. You hold XEQT and you have other ETFs underneath it that fill the total global asset allocation, right? But one of the things I just want to highlight when holding XEQT, you are holding 9,130 equities, which is quite significant. All right, so getting into the portfolios that I've constructed. So the top one, most of you will be familiar with, which is XEQT. Now, again, like I had previously indicated in my last video, I can't go back 10 years on just the XEQT ticker symbol because it was created in 2019. So again, I just took the underlying ETFs and gave the proper allocation to them to basically build XEQT. So underneath that, we're going to have the what I'm going to refer to as top company focused. So we're going to have VFE, which is going to be investing in the top 500 US companies, and we're actually going to have an asset allocation of 50%. Then I'm going to be doing VDY, and for those of you who don't know what VDY is it's more centralized in it's a Canadian ETF, but it's primarily focused on energy and the financial sector. So just for quick reference here, if I go to the portfolio, you can see here it only has 52 stocks, where I think the total Canadian market is like 182. So again, it's very centralized, kind of like VFE, where it only invests in the top 500 companies in the US. This one isn't specifically the top companies in Canada, but they're actually focused more on the top dividend players. Now, in my opinion, the top dividend players in Canada are typically like, some of the top companies. So in my opinion, VDY is kind of similar to VFE, even though it's a dividend focused compared to a growth focused. Maybe it's my own rationale behind it, but maybe you don't agree with me. But that's kind of how I look at it. Is VDY is kind of a lot of the top companies in Canada. So just kind of getting into the exposure, you can see 54% of financials and 29% of energy, right? So that's just where I'm going to quickly highlight there on VDY. Then again, back on the top company focused, I just went with XEF, which is a BlackRock ETF that focuses on international, which is like Europe and Australia. So I do have that thing opened up here, and you can kind of see, I was going to go to the exposure breakdowns, but again, it's in international for finance, industrial, healthcare, and it's kind of interesting because like tech is really low. So we are kind of focused heavy on the top 500 companies in the US with VFE, but that one is going to be very focused on tech. I think it's actually near 30% of the ETF. Let's just see here. Number of stocks, E505. Again, it's the top 500 companies. Let me just get down to the, right here, 29% of international. So, or sorry, 29% of tech. Again, tech is very popular in the United States. All right, so going down, so now we have the total stock market focus. So we're going to have VUN, which is the Vanguard US Total Market. So that's going to be the one that invests in the roughly that 3,700 different companies. So it's not just the top 500 companies in the US. Then we're going to have VCE, which is the total stock market of Canada. So again, I think that's roughly around that 182 equity holdings. And then we're again going to have the XEF, which is the international exposure. And then we're going to have XEC, which is the emerging markets or emerging countries. And it's a very low weighting. You can see here 45% in the total US, 15% in Canada, 35% in the international, and 5% in the emerging markets. So now let's get into the actual results. So you can see here, just like people will remember from the previous video, XEQT coming in at 9.21% for the compound annual growth rate. And the top company focus, so again, that's the top companies in the US, and that's the top, well, in my opinion, the top 52 companies in Canada. Or, maybe I shouldn't be saying top companies, but the top dividend payers in Canada. Coming in at 11.08, and then the total stock market focus being at the 10.06. So the actual our own flavor of the total stock market focus came in higher than XEQT. The reason for that, I'm just going to guess right now, is because the Canadian market has kind of lagged behind over a number of years. So we do have a higher allocation on this one, being 35% on international compared to, like, say, XEQT having 25% Canadian. Again, the cool thing about building your own portfolio like this is you get to control your asset allocation into each individual ETF. All right, so just kind of looking into just a few other options here. So we looked at the previous ones where we had international exposure. Now we're going to be just kind of looking at more North American focused, right? So this one I'm calling again the top company focus, which is 65% into VFE. We're going to have 20% in VDY, which is the high dividend paying or the dividend focused ETF for Canada. And then we're going to have VCE, which is the total market of Canada. So just to give you a quick kind of comparison where how XEQT has that 9,100 different equities, this one particularly, this top company focused, we're actually going to be having more. So we have 505 from VFE, we're going to have 52 from VDY, and then from VCE, which is total Canadian market, is 182. So we're not even over that 1,000 threshold in this example. So again, we're shrinking back quite significantly on diversification. Going into the next one, which is US and which I'm calling is US with world and small Canadian. So this again has the total US stock market now at 65%. So now we're going into that 3,700 equity range. We're also adding in again VCE at 10%. So small allocation to the Canadian market being, and again, that's about 182 equities. And then we have XEF, which is the international exposure. And as far as I remember, that one has about 2,700 equities and being at 25%. So again, we're getting much closer to what XEQT is. And so looking at the returns, you'll see here the best one was again the top company focus, the reduction down to very small amounts of allocation, being around that 500, or sorry, that about just under that 1,000 equity holdings. And the second place coming in with the bottom one there, the US with world and small Canadian cap, or sorry, small Canadian VCE, and then XEQT being last at 9.21. So I find this kind of interesting because, you know, I'm a big believer in XEQT, but everywhere we look, you know, in the past 10 years, we keep seeing how XEQT is falling behind. Now, I just kind of want to stress, and this was kind of stressed again in the previous video we had comparing against VFE, is that over the course of 30 to 35 years, there are going to be different cycles, right? And in that previous video, we did highlight how there were years where international outperformed the US stock market consistently. So if you're my age, around that 33 years old, pretty much any time you would have been in the age of investing, the US stock market has done extremely well. But when is that cycle going to end? That is the hard question, right? The magic 8-ball question that everyone wishes we knew. So in the last 10 years, even longer, we would have done exceptionally well being just purely in the top 500 companies in the US. Because if you looked at that video, that one got near 14%, or actually was above 14% compound annual growth rate. So the question is, when it comes to you as an investor, do you want to have global diversified portfolios such as XEQT, or do you want to bring that global diversification down slightly? You control your own asset allocation, and there are going to be chances where you come out on top, but there's also going to be chances where you actually will underperform XEQT. So it's your call. In conclusion, myself, I'm still going to be an XEQT investor because I'm so young and I have 35 years until retirement, and I personally believe that there's always going to be these cycles. If you look over history, there's always different cycles. So when I see how the international has outperformed the US stock market consecutively, I'm anticipating that to happen sometime throughout my investing career. So again, I'm sticking with XEQT. Yes, it has performed less than the US stock market has over the last while, but I don't think that's going to be the forever direction. So again, that is my choice. I actually would love to hear what you guys are doing. Leave a comment below. If you like this video, definitely hit that like button. Subscribe if you want feature content, and I look forward to seeing you in the next one.